As we are about to start, we would like to ask you to take the seats. Please take your seats. Thank you. Excellencies, ladies and gentlemen, please welcome Jörg Rochel, President of the ESMT.
Dear Professor Röller, dear Mr. Mensor, distinguished guests, excellencies, ladies and gentlemen, it's a great pleasure, it's a great delight to welcome you to the third Berlin Global Dialogue here at ESMT Berlin. The German saying has it that whenever you do something for the third time, it constitutes a tradition. So this means now we have a traditional Berlin Global Dialogue. It is a great pleasure to welcome this dialogue here, as Berlin embodies transformation much more than any city around the world. It's a living proof that dialogue and that change can happen via dialogue. And this is why all three elements of what we see in the Berlin Global Dialogue are important: Berlin, global, and dialogue. Berlin represents transformation and renewal. Global reflects the reach and diversity of our community, and dialogue captures how we work together to turn understanding into action, into transformation. This campus, as you can see, tells exactly this story. What used to be the headquarters of socialism on German soil is now a business school that attracts students, faculty members, and colleagues from around the globe. 25 global companies having created ESMT a little bit more than 20 years ago, exactly with this ambition. At the same time, when we look at our situation today, it is a situation that is marked by probably the highest level of uncertainty in decades, maybe the highest uncertainty ever. And as we know from the economist Frank Knight, risk is measurable, uncertainty is not. So this challenges us, that poses significant challenges to what leadership means in the political sector, in the business sector, in the academic sector, in society more broadly. And this is why the paradigm, the title of this Berlin Global Dialogue, Shifting Power, Shaping Prosperity, is exactly the right one to look at. The Berlin Global Dialogue brings together leading representatives from all these sectors, from business, from government, from academia, to act on shared insight. And this is why the global nature also of ESMT is so important. We have now students from more than 100 different countries, and they really come together here to take part in this discussion. And in particular, we are very delighted to have the Young Voices delegation with us. These are 34 emerging leaders from 22 different countries who really are encouraged, and Henrik and myself, we encouraged them yesterday in a very strong way to bring in their perspectives the generation that is going to be the next leading generation. Platforms as this one, as the Berlin Global Dialogue, are not just valuable, they are essential. They require partners, and this is why we really are extremely thankful for all our partners that make this possible. Our academic collaborators, our business allies, our policy leaders working with us. And in particular, I would like to thank the founding chairman, Lars-Henrik Röller, for making this possible and to bringing all us together here for a very impactful and a very meaningful dialogue. We as ESMT also think about this in a broader way. We think of Germany being the ideal place for this dialogue, a stable country, a country that shares the openness, the freedom, and this is also why we have teamed up with other business schools in Germany, some other leading business schools in Germany, for a campaign that we call Say Ja to Germany, meaning please come to Germany, come to this place. It is the place at which you can flourish, at which you can develop. It is a place of openness, it's a place of global cooperation, and this is what really, I hope, is going to drive us over the next 2 days. What unites us is the courage to confront uncertainty, as Professor Knight said, the commitment to evidence-based discourse, and the strong confidence in that dialogue, serious, rigorous dialogue, can shape prosperity even as power shifts. These are the values that guide us at ESMT, and this is where I hope that the transformative energy of Berlin will inspire and bring this dialogue forward. With this, a very warm welcome from my side, a very warm welcome here at ESMT to the third Berlin Global Dialogue. It's great that you found the way here to Berlin or online to watch us, what we are going to debate here. And with this, I would like to now invite Bernard Mensah as the opening speaker following me. Thank you.
Good afternoon, everybody. My name is Bernie Mensah. I am President of International at Bank of America. And I'd like to join Professor Rojo in really welcoming everybody to Berlin today, to this year's Berlin Global Dialogue. And we are proud at Bank of America to be in great partnership with the ESMT and with the entire dialogue team. We're proud to return for the third year as a principal partner to this event. It's a really vital forum that brings together leaders from business, government, academia, and really helps to shape a dialogue around a new economic era. So this year's theme, which Professor Rojo touched on, shifting power, shaping prosperity, couldn't be more timely. We see the global order being redefined to some extent. Power is more diffuse, alliance is more fluid, and the pathways to prosperity are more contested than ever. And amid this complexity, there's one clear thing, which again was suggested, which is that really the dialogue is not a luxury, but it really is a necessity. And over the next 3 days, I think we'll all explore, as global leaders, how we can really respond to this. As a global financial institution, we see the rise of emerging economies. We see the transformation of global trade. We see the climate crisis. We see the disruption potential of AI. And so the agenda that is being going through over the next 2-3 days really reflects the urgency and the scale of the challenges ahead. But it reflects something deeper. I think there is progress on listening. There is progress on collaboration and bold action. And in Europe and in Germany in particular, there are really some very compelling case studies. After years of cautious growth and slow reform, it seems like there's a new narrative emerging, and one that is rooted in fiscal credibility and which is powered by a new industrial renewal. So Germany's $500 billion stimulus and $735 billion Made for Germany initiative seems to be reshaping investor sentiment and redefining Europe's competitiveness. So at Bank of America, we've been really tracking this shift quite closely. In our research function, we have a global infrastructure basket, 14 companies in construction, logistics, and capital goods, and I was looking at this, and it's up nearly 50% this year. So this performance really reflects not just the policy support, but the renewed global appetite for European industrials from institutional investors in the US and in Asia as well, and for hedge funds rotating back into the European story. And this may not be a short-term bounce, we'll see. The scale of the private sector commitments suggests a cycle of investment that should go beyond next year and through to the 2030s. And Germany's pivot is already influencing how companies plan, how policymakers frame integration, and how investors view the region. And that's why this dialogue really matters. And it matters really beyond Germany. It matters in Italy, it matters in India. And investors' views in many parts of the world and the cross dynamics really are changing and evolving. And we see this very clearly in our global view, as it were. And so this really 2 or 3 days really provides a space for candid civil exchange, and it welcomes bold thinking. And it brings together a really truly global community, leaders who are really ready to challenge assumptions within the next few days, find common ground, and forge new partnerships. At Bank of America, we're in over 38 countries. We're 80-90% of global GDP. So we see firsthand how these things are interconnected, and I'm sure other global institutions do as well. And that's why we're really proud to support this dialogue, because the stakes are high and really the moment is now. And it's been a great privilege for me personally and on behalf of all of my colleagues for us to collaborate with Lars Hendrik, with Jörg, and with the ESMT team, and to help deliver what I'm sure will be another spectacular dialogue. So yes, I hope it's right that after 3 years it does become a tradition. Thank you. And the most important thing I should do is really pass on to the founder and chair and a great friend and colleague, Dr. Lars Hendrik Roller. Thank you.
Okay, thank you very much. Welcome, everybody. Thank you, Jörg, also for ESMT and Bernhard. I just want to, he's our principal partner, which is Bank of America. There are others in the room, so we're very happy to have that. I just want to say a couple of things and then pass over to our very important first session. So I think, when we started this 2 years ago, I wasn't quite sure that we're going to end up where we are. I mean, not the BGD, but the world. But as I said before, I think we were kind of ahead of the market, maybe in some sense, even though dialogue and working together and multilateralism, as we called it then, were there for a long time. But I think, the market has kind of moved our way, and I think more dialogue is needed. And we have now a very good established institution in Germany, which I'm very proud of. Berlin is a great city for peaceful unification, as in our name. And I think that is something which is very, very good. And, dialogue is a necessity, and I think we should promote that. The second point is, of course, the world has changed dramatically. I'm not sure it's all good. I'm sort of grew up in the multilateral part where, Germany clearly benefited, but, that's gone. The world is changing. And the idea was, and there are many issues which we'll be discussing in the many sessions. There's security issues, there's dependency issues, there's technology issues, there's supply chain issues. Just very recently, if you think about that, which makes the world a lot more complicated. And I think that we need to, so my credo has always been, but maybe I'm old-fashioned. Is that we need to work together. We don't want to fight each other, and hating and fighting and that kind of attitude is not something which I'd like to stand for. I think this sort of idea that we work together, I think, is very important. The theme, and I think that's timeless. We obviously have problems which affect all of us. And then the theme this year. Remember last year we had a theme. Which was very popular, common ground. So I still think that is relevant. So searching for common ground, and many of you talked about that also here and subsequently. And this year we have this theme called shifting powers, shaping prosperity. And the shifting powers part is, somebody said this morning, we already had sessions this morning, that it's the fact, it's the reality. The world is changing. It's not just economically, it's politically. There's just shifting powers. And it's a challenge in particular, I think, for Europe, but it's also an opportunity. I think that is very important. So the shaping prosperity, which is the second part of the slogan this year, says, yeah, the world is changing, but let's think about the positive sides of it. And I don't have to repeat what is changing. Alliances are becoming more pragmatic and flexible, this whole transactional approach. And that, some of you may know this better than I do. I think sometimes that may actually work. But sometimes it doesn't, because you need a long-run policy to go with it. There's a lot of scarcity issues in the world, thinking about visitor from China, rare earth, or thinking about many other things where scarcity creates tension, and that can be weaponization, that can be abused, and that has really dramatically increased. I think the third one is, and I think there's hope, is that actually, given that technology, power is also more concentrated. I think there's some very powerful players, both private and public ones. And I think that raises the issue of regulation. Regulation is a separate issue. Industrial policy or political interference. So when you have more winner-takes-all markets, and I think that has dramatically increased, in particular digital age, governments tend to get involved in all that, everywhere. And that is sort of, a lot of these changes we'll be discussing. Now, where is the world going? And we had I was listening to this session this morning. So where are we going? So it was, we know where we know what we're not going to go, but we don't really know exactly where we're going, I think. I mean, maybe you have ideas, and I think there's sort of three models which people discuss. Just want to mention them. And there are variants of that. The first one is that we're having these spheres of influence. So there are different blocks in the world. Somebody was saying this morning, the West. We should continue being, Europe should be the West. We should not, we should be aligned, and they're sort of aligned on many issues. So this multipolar world and blocks and all of that. I think this is one model, which is not my favorite one, but I think this is one possible way of going. The second one is much more transactional. I call it transactional anarchy, where you pick and choose and use your power, and of course the more powerful countries are benefiting from that. I think this is, for me, ethically the biggest problem, and that's why we invited lots of people also from small and medium, and they're not that small anymore, and they're also very powerful. That they'll be left behind, and I don't think that's good for the world. So I think this transactional, but we might end up that way. And the third one is what I call functional or inclusive coalitions. So the idea here would be that on certain topics, like climate, we create alliances and we try to move the world forward. We have the COP very soon, and obviously we need to tackle the climate issue, even without the federal US. The states are, I think, very different. So I think that functional, inclusive approach, which I think is for me a very appealing one, with a minimum of multilateralism there, in particular when you look at the international institutions. We have Nadia here, welcome, European Investment Bank. So there's a lot of debate about all these international organizations. Do we need to reform them? Are they fit for purpose? So I like that third part where it's a functional, what I call functional inclusive coalitions. But there, I think the three things, I don't know where you come out on that. So we need order. We don't need no order. We need order. And the question is, how are we going to do that? And the final point, which is very strong also for me in Europe, is that in the end, and I think all of you feel like that, politicians and also I think business people, we need to deliver for our people. I mean, this multilateralism has not been making everybody happy sometimes. I mean, we made mistakes also. I think there's also a redistributional issue, there's social issues. So whatever the world gets to, and also this is true, by the way, for Germany. We also have a session on Germany with Martin Blessing here. We don't deliver on these things. It's not going to be a very successful one. I'll cut it a little bit short. So this is to me, sort of where we are in some sense, and I don't claim to know everything here, but I think that's one way. Then there's the shaping prosperity part, and that's the positive side. And there I like to think that there's a lot of things which can come out of it. And I think there's some principle behind that, for example, that you do work together, not a zero-sum thinking or negative-sum thinking, but there's positive, look for the win-win situations. I also think that these concentrations, which you're seeing, depending on what segment of the economy you look at, we need to make sure that we're expanding the circle of winners. I think this inclusivity, I'm an economist, don't like to talk that much about equity, more talk growth, but I think this inclusivity, if you look at the global world, I think is very important. There's a chance here that we have co-shapers rather than bystanders. This is a big issue, I think, also in the international, in those who like to be multilateral. I think that is a big advantage of the multilateral, that, people are there. There's a big issue looking at others. Are everybody equally represented in these multilateral institutions? That's another big issue. But I think those things are important. I think we need to be more predictable in many of these things. And the final point, last year I talked about the independence trap. Nobody's independent. And there's only a question on what are you depending on? And I think this idea of mutual dependence is, of course, very important. Now, if you think about Germany, we've become very dependent on certain countries. I'll leave it up to you to fill in the blanks. But I think as long as you have a mutual dependency, I think that is very important. So there's a lot of things we can do better, but not calling it multilateralism anymore. I call it something different, but I think there are things to be done. Egon Zehnder this morning, this is our business partner, they do a survey. And they ask business people, and one number I wanted to tell you, they're asking, given all that change in the world and given all this resilience and these risks you have as a business, how confident do you feel that the business has done their job? So how confident do you feel that you're prepared for all these geopolitical changes? Last year, it was 18%. This year, it's 64%. This is the Egon Zehnder thing, which is out there. So there seems to be more confidence on the business side of having dealt with it. But there also, it costs money to be resilient. But there's a positive story, I think, from the business side, which we will talk about. So let me just say that we have a great program. Let me leave those remarks. Great program on many of these issues. Trade, as I said, and economic and security issues, investment issues, energy. We have about 1,000 participants this year, so we're slightly growing. And we have even more, we have 100 countries. Last year we had 70, so we really have a lot of countries here, which I like, because what I like about the BGD, it's not primarily transatlantic, it's not primarily European. I think those are the two most important things for us still as Europeans, but as the rest of the world. And we want to make a contribution with this format, Jörg, that we have this sort of global reach, and we try very hard. And we have the voices. We don't call them young leaders, we call them young voices, because we need the voices of the young. They met, they have a declaration which is online. Read it, it's very interesting. They're having even a session by themselves, the young people, and they're basically from also 30 countries. They will be in each session and they'll be asking questions. So I think with these intergenerational issues, I think, again, when you're out of government, you start to become a little more flowery maybe, or principled, whatever the right word is. So like inclusion but the intergenerational issue, I think, is also a very big issue. So yes, power is shifting. My conclusion, power is shifting, but prosperity is ours to shape. And I think many of the people in this room, we're not going to solve all problems here, but I think what you can maybe take away with something, so you take better decisions afterwards. But you're in charge of it. We need to redesign the global operating system, if you want to use a word from IT. Let's trade fragility for trust and turn uncertainty into confidence. I mean, this is obvious. The question is only how, but I think we need to work on that. And no better place to do this than Berlin as a city, and no better place to do it, ESMT Berlin Global Dialogue. Thank you very much. I'm looking forward to it. Enjoy the dialogue. Thank you very much. And now, I'm using something from a competitor. Let's get started. You know what I mean? Let's get started with a great session on investment amid uncertainty, moderated by our great repeated visitor here, Francine Lacqua from Bloomberg. Francine, thank you.
I love the setup here. It's like an intimate boardroom, and we have 45 minutes to redo the world. Demographics, debt, deglobalization, according to our economists, are all set to weigh on the pace of expansion. India may outperform, but not enough to offset the slide of China's growth. Artificial intelligence, which we'll talk about, may yet prove a significant productivity driver, but its game-changing potential remains unproven at the macro level. So many see this long-term outlook for global growth as uninspiring. It may be very different from investors. So let's get started. We have 45 minutes to frame and discuss the following: investing under uncertainty, capital strategy for a fragmented world. And I'm delighted to be joined by Henry Kravis, co-founder and co-executive chairman at KKR, Nadia Calviño, president of the European Investment Bank. Mr. Kravis, let's start with you. We talk about the New World Order. We talk about, a fragmented world changing. But what kind of world are you seeing October 2025?
Well, let me say, one, happy to be here. This is an important topic. I've only been investing for 56 years, and I've seen all kinds of chaos and confusion, inflation, deflation, etc. And if you invest for the long term, I'm not a stock picker. I know nothing about picking stocks, but if you invest for the long term, I can find opportunities in almost any environment. So today we've moved from a period of benign globalization to great power competition, in my view. Geopolitics now play a much bigger role than they ever did before, particularly in economics and in technology. Governments around the world are reasserting much more influence today than they did before. Industrial policy, as an example. Investment screening, who can invest in each country, etc. And supply chain localization. Used to be, you didn't have to worry about that. Today, you must worry about that. The security of everything today is a very important issue, and it means data, it means energy, it means infrastructure, and these are all strategic assets now, and they're very important. I wouldn't say there's a lot of talk, well, globalization is ending. I don't buy that. I just think it's being rewired. It's being rewired around security. It's being rewired around resilience, and obviously regional blocks. Asia is a perfect example of that. So I started by saying that I really believe there's opportunity and disruption, and I could define where we are today as chaos and confusion. But so think about 5 countries in the global financial crisis. There were 5 countries, your country, Spain, Portugal, Italy, Ireland, and Greece. They were going to be gone. We didn't believe it. We went and put a lot of money into Spain, because we believed they weren't going away. This was an opportunity. Nobody wanted to put a penny there. This is an opportunity right now. Germany's got its issues, France has got its issues, UK has its issues, US has its issues, but don't give up on them. They're not going away. You just have to know where and how and be patient. And you must have long-term patient capital. So I will tell you, we are very big believers in Europe. A lot of our competitors and they're rushing off to Asia. We're big in Asia too. But don't give up on Europe. Europe has a lot to offer. And just this year alone, we put over $25 billion to work in Europe.
That's quite a number. It's one of the highest in Europe. So we'll talk about Europe. We'll get back to Europe. And I also want to ask you where you see chaos and confusion. President Calviño, how do you see the state of the world? Is it chaos and confusion?
Well, thank you very much for kicking off this discussion. And it's a great pleasure to be here and, of course, to share this very interesting exchange. 3 thoughts from my side on these introductory remarks, which I find extremely interesting. First of all, I think we are indeed seeing a new global order in the making. And I think it's important to realize that the world of yesterday is not coming back. And so it's very important to look ahead, which I think is exactly your message, Henry. We have to look ahead. There's a new global order. It is in the making, which means that we have an opportunity to shape it. And you will not be surprised to hear, I think it's very important that Europe plays an important role in shaping it. Because, and that's my second reflection, in a world where everything becomes much more transactional, I hope it's transactional chaos for a while, and then it will move towards this more inclusive, win-win partnership built new global order. In this transactional reality, actually, I think a very valuable asset is trust and confidence. And Europe is providing that message of trust and confidence to our partners, which is something I see every time I interact with any other country around the world. Everybody's asking for Europe to remain a beacon of democratic values and human rights, and also stability and trust. You know, they know we are looking for win-win partnerships. And that is a very valuable asset. And that brings me to the third reflection I was thinking about this morning as I was coming here. Because sometimes you have this feeling that what we are seeing right now is 2 elephants fighting. And you can guess which 2 elephants I'm talking about. But I strongly believe Europe is not just the grass underneath. I think that we are a rhinoceros. It's just that right now maybe the horn is a bit weaker or muffled because of these excessive dependencies that we may have. Lars Hendrik was saying about there's always mutual dependencies, it's just a matter of balance. Well, maybe it's a bit imbalanced right now, but once we get that sorted out, well, watch out, you know, you shouldn't upset a rhino, should you?
You absolutely should not, President, but does the rhino need to choose between the US and China in terms of allyship, or can it straddle a bit of both?
Well, I was asked this question a long time ago, and I think it's a no-brainer, really. You know, you cannot ignore China. And of course, you cannot ignore the US. So we have to find our room to maneuver and our future in interacting with these 2 big powers, as well as with many mid-sized emerging powers. I think that was what Lars was talking about. When we're talking about South Africa, India, Brazil, these are very important counterparties to Europe. I am meeting with them regularly, and they are asking for Europe to play this very important role. We shouldn't neglect them, I think.
Mr. Kravis, can you maybe explain to the very international people here what you think the US wants right now? And if you look at economically what the Trump administration has laid out to achieve, how much of that have they achieved? With the trade, with the tariffs, but also a weaker dollar.
Let's start with the tariffs. U.S. in many ways has been taken advantage of for a long time. And given that they were taken advantage of and others were not carrying their weight, that is what has spurred the Trump administration on to saying we're going to have an equalization. Now, having said that, there are winners and there are losers in that. We happen to have a portfolio at KKR where only 15% of all of our assets, which are over almost 700 billion, are affected by tariffs, because a lot of what we invest in are local, and we're investing in consumer products that are local, and foreign trade does not play as big a role. Now, what do they want to accomplish? Clearly, they want to make sure that the U.S. is number one in the economy, number 1 in defense, number 1 thought of in the world. That's not an unreasonable objective in my view. But let me change it around a little bit, because where we are today, there we started talking about disruption, and what does disruption really mean? Disruption, in part, was caused by the new Trump administration, but it had started before the Trump administration. A lot of what you're seeing today is really a continuation. You can't just put it all on this administration. It started maybe going back as far as the Obama administration, and then you went through the Trump 1, the Biden, and now we're in Trump 2. But there's been a structural shift. The rules-based global economy is giving way to very much of a transactional, great power competition in my view. And so what does that mean? That creates opportunity. We come back to what is the U.S. trying to accomplish. I think they're trying to, from their point of view, this administration, I'm not in the administration, to come up with a more level playing field from their perspective. Private activity is going to play a very big role. And in large part, if you think about the need for capital for energy, the need for capital for data infrastructure, for data centers, national security is now playing a very important role. So that creates huge opportunities. The governments cannot pay for all of this themselves. Germany, we're in Berlin. Chancellor Merz just came out in the end of July with Made for Germany. Terrific idea, great program, but it's going to take capital, and it's going to take a lot more capital than what your 65 or so large companies can supply. It's going to take outside capital to tie in with the government here. So again, the physical infrastructure. Everybody talks about AI. It's terrific. It's great, and we're changing how we all do business forever. But you have to spend a lot of money on that infrastructure, or you're not going to be able to accomplish what you want. We talk about the decoupling. I'm not sure that there is. Yes, there's a lot of talk between the U.S. and China. Okay, we're competitors. But we need each other, and we're going to need each other for a very long time, in my view. And Europe is going to need China, and they need the U.S., and we need Europe. So I'm not giving up on that. Think about energy, minerals, chips, defense, security, whatever you have. Those are all mutually dependent on each other.
Yeah, but at the moment it's like this. It's at loggerheads, right? We saw it for the rare earths. We saw it for energy. Is money going to the right places? Is it being deployed globally to where it should, to where it's needed, President Calviño?
Very good question. Before I get to that, because I beg to disagree a bit with you, I think the imbalances and the need to modernize the global framework, institutional framework, was there before. I totally agree. And the World Trade Organization was obviously in need of a deep revamping. You cannot continue to consider China an emerging economy, and the rules need to be fit for purpose. And so, likewise, when we're talking about the capital allocations and the relative power of these mid-sized economies, emerging economies that are actually, they want to speak with a louder voice and have a greater influence, and rightly so. So I think that indeed has been building for a while. But I think there's a step change since the beginning of the year in the sense of the volatility and the uncertainty about where things are going. Just talking about the tariffs, and it is interesting, and I think the objective is quite clear. It may be of interest to this audience. We just published our investment survey, which we do every year with European and American companies. It's interesting that 77% of US companies say they are, the shock of the tariffs is affecting their investment strategies and their outlook. 48% of Europeans. So actually, you would gather that actually US companies are very much impacted by this tariff shock. And I don't know whether this was the intention, but I would say that is the impact that this is having. Investment in Europe so far is proving to be quite resilient. So, we have to, as you were saying, and I fully agree, we have to grab the opportunities. There are opportunities always when there's a challenge. But I would say there is a step change in terms of shifting strategic partnerships that we thought were reliable until, well, some months ago, and that is a step change, I would say, in terms of the shifts in the world.
So just a question on that, and I understand what you're saying. I would say that it's not the tariffs or the confusion that's causing, or the tariffs that's causing the reason for not investing. We did a survey of our own companies, and we have over 250 companies and around the world, and they are investing still, which is a surprise to me. I think a bigger issue is that everything changes every day. If you tell me we're going to have a round table, and that's what we're going to work on, I can figure out how to invest. You tell me today it's round, tomorrow it's square, it's going to be a triangle the next day. I'm going to wait until you decide what's the permanent size of the table. And that's a little bit of what we're going through right now. It's this change every day. I sort of wake up and I wonder what happened while I was sleeping. Something probably happened somewhere that's going to change what we're doing. So I agree with you, but in a way, it's somewhat of an excuse. What's not taken into your question, and I think that survey is an important survey, is are we not investing because we're worried about where the economy is going? We're going into a downturn. Or tariffs are now on, and as a result of tariffs, we're going to have higher inflation. So therefore, we will wait and see. You can't take any of these surveys, in my view, as absolute. You have to say, okay, what else is going on in somebody's mind that's driving their decisions to invest or not to invest?
No, absolutely. And to come to your question, and I fully agree with you, it's the volatility, it's the shifting views every day that create this top uncertainty, which is stopping some investments, whereas others are, of course, profiting also from this volatility. But to come back to your question, it's a very interesting question because in the last years, and maybe that brings us to this issue of artificial intelligence, no? There's so much debate. Is there a bubble? Some are saying no. Some others say, yes, there's a bubble, but it's a good bubble. Whatever
I've never heard of a good bubble.
Nobody knows. So it is a pertinent question. What I think is that from the European perspective, we are really well placed. We have identified very clearly where the priorities are. The European Investment Bank has priorities which are fully aligned to those of our shareholders, the 27 member states unanimously supporting the approach, starting with climate, supporting the green transition. I want to highlight these. Technological leadership, security and defense, of course, and then a list of 8 priorities unanimously supported by our shareholders. And so I think that we have a quite clear strategy, and we're going to be putting our money where our mouth is.
Yeah, and this is the important bit. When you look at trends longer term that are almost immune to all the noise that we're seeing, right? The difference for an investor, I mean, on Bloomberg every morning, we talk about the table being square and round, but there's just a lot of news coming from all sides. So where do you see the longer term opportunities? I know you mentioned, for example, data centers that do with AI. I mean, how do you find that North Star in saying, look, investing, I'm happy to put 25 billion in over the next 5 years?
So when we went through the global financial crisis in the US, and I'd never been through anything. I'd been through downturns, I'd been through inflation, deflation, what have you. Never seen anything like that. And George Roberts, who's the co-founder with me of KKR, and I said, focus on what you can control. There's so much noise out there, there's nothing you can do about that. Focus on where you have some influence, which in our case was our portfolio of companies. And that's exactly what we did. And we said, secondly, be prepared because there's going to be enormous opportunity. Lean in now. So I personally, and I'm in Europe probably 8 or 10 times a year, I personally made the decision to go to Spain. And Prime Minister Rajoy was in office at the time. And I met with him, the finance minister, and many others. And because I concluded that Spain was not going in the ocean, that it was going to be here for a long time. And I was looking for someone to tell me, were you going to go into a good bank, bad bank structure, which is what we had done the year and a half before, which worked. And I finally found the right guy who was running the bad bank. Once you clean up the banks and you take the bad assets out, you can attract foreign capital very easily. You're not going to get a penny if nobody knows what's on the balance sheet. So they did that. And I came back from my number of meetings that I had with government and corporate people in Spain, and I said we should back up the dump truck and put as much money into Spain as we possibly can. In my view, we didn't move fast enough. Our teams were a little more conservative than I am. But we put a lot of money in, and it worked. And so what areas today? Okay, security of everything, number one. Defense and dual technology, they tie together.
Yep.
And so I would say that's number two. Critical resources is three. And you have to think about resilience. What areas will be able to withstand those shocks, those surveys, whatever it is? We're right now saying, and I'm sure the audience is interested, what is KKR thinking about the U.S. economy? Because oftentimes if the U.S. economy goes one way, then we end up with everybody sort of follows. The U.S. economy, in our view, this year for 2025 will end up at between 1.5% and 2% GDP growth. Inflation is sort of staying about where it is. But think about this. If inflation is in fact sort of 3% right now, and you have a 10-year treasury at a little over 4%, you only have really a 1% real rate. Now, is that too low or too high? You all be the judge of that. But we see that inflation will be, I think we're going to have stickier inflation around the world. I don't know what happens in the long term with tariffs, but they have to at some point have, and somebody's got to pay for it. You know, either the company that's absorbing those or the customer. It's got to go somewhere. And what we're seeing right now in the US is very much a K economy. Mm-hmm. Think about it. You have the K. You got the upper short leg is maybe 30% of the economy. Those people that have capital. If you had any assets during COVID, you did really well because inflation started kicking in, appreciation in real assets, appreciation in stock market, bond market, et cetera. But if you were going hand to mouth and you were strictly on a fixed salary and you didn't really have any chance to take advantage and didn't have any savings, you were hurt. And so what's happened today is that we have broadened the spread, in my view, between the haves and have-nots. That's not good. That's not good at all. We have to figure out what are we going to do to make sure that all people are able to benefit from that.
Can I also ask you about a market correction, and then we'll get on to where the EIB is actually invested in. But last week was quite a week. We had Jamie Dimon talking about cockroaches in certain private credit companies.
Yeah, but they don't invest.
They don't invest, but do you worry about something systemically wrong with private credit?
So let me tell you about private credit. No. Just recently, okay, we have a big private credit business at KKR. So do many other firms have private credit. Even banks have a sleeve of private credit. Everybody's talking about, oh my God, private credit's going to go bad. I do worry about one thing. I worry about those firms that don't have a driver's license, that have decided they want to get into private credit, have no way to drive, haven't passed a test or anything. And yeah, will they have problems? They could. I don't find it systemic. We don't take deposits. This is just really what it is. It's private credit. 2 big bankruptcies last 10 days. Not one penny of private credit was in them. But the market hit all of us that are in private credit because they assumed that was it. And then finally, once they figured out, well, this is really all banks, it was UBS and Jefferies were the 2 big banks that were the big lenders in that. I am not worried about a systemic risk issue in private credit.
Is it, I mean, the other question is it the banks or the private credit firms that suffer the most when we reach peak correction?
Depends. The thing you have to focus on if you're going to be in the credit business, what are my risks?
Right.
How am I protecting my investors, or how am I protecting my portfolio? And if you don't think about that, and you're only trying to knock the ball out of the park on every investment you make, you're going to have trouble. You will get in trouble. If you have a balanced portfolio, very diversified, you'll get through this just fine.
President Calviño, where does the EIB, what are you planning to deploy for the EIB?
Yes, before I get to that, I wanted I fully agree with you. Having lived through the great financial crisis, but then having lived through the pandemic, being minister in my country and vice president in the country, how important it is to focus on what you can control. I couldn't agree more. That you have to identify what are the levers that you can actually influence and then try to focus on that, because the noise and the uncertainty may actually distract you. You have to be very focused, and I am also very, very satisfied about the way the economy is going now as a result of the good decisions, I think, that were taken at the time. Now coming to the European Investment Bank. So we are at a quite unique position right now in the new global geopolitical, geoeconomic environment, because we are a very large financial institution, 600 billion balance sheet, 90% of our investments in Europe, 10% outside, but that's not non-negligible. It is material. So we are a very important player of the multilateral bank family, but we are the only one that has as shareholders only the 27 member states of the European Union. Which means, as I mentioned it already, this alignment, this policy alignment is extremely relevant, because it allows you to identify, well, where are your priorities and what are we going to be doing, and to feel that you're accompanying the economic policy that is driven in the 27 member states. So it means that we can continue to mention words that are revolutionary in other places, like climate. I think the green transition is a no-brainer for Europe, in the sense that we have to reduce our excessive dependency on fossil fuel producers. And that explains why more than 90% of European companies are actually investing in this green transition. And it means that for the European Investment Bank, we are financing 40% of the energy infrastructures that are currently being built in Europe. We are supporting the deployment of renewables, including here in Germany, but also energy distribution networks, innovation in terms of new fuels, new technologies, net zero technologies, supporting the agriculture sector and adaptation to climate change. We have just agreed on our roadmap for the coming years. We're going to double finance for adaptation to the impact of climate change. So that's a very big area. Second area, technological leadership in a time of change. But Europe is quite leading in areas like health, green technologies, and we want to continue to have that leadership. So we have launched a new program, TechEU program, to mobilize 250 billion euros up to 2027 in this area. And it means supporting startups. It also means supporting large investment in research and development and innovation in our market. And also building stronger capital markets. Probably we will talk about that in Europe. Third area, security and defense, the security of everything. You summarized it very well. We have moved from virtually nothing to 3.5% of our investments this year in the area of security and defense. We have a very robust pipeline, more than 30 flagship projects. That's from military facilities in Lithuania to satellite, cybersecurity, drone manufacturing, also support to SMEs. We actually signed a very important agreement with Deutsche Bank to provide finance for small and medium-sized companies in the supply chain of Europe's security and defense. That is an area where, as I was talking about the rhinoceros before, the sooner we remove the muffling of the horn, the better, so that we can play our role. So the European Investment Bank is accompanying all those priorities. And let me, before I close, there are other areas, but I would like to highlight the importance of our activities outside the Union, because that is supporting strategic partnerships, which are extremely important in this brave new world, which is in the making, because what we want is to show our partners we are in for the long term with them, we are a reliable partner, and we want win-win outcomes. We continue to believe what's good for you is also good for me. And that is quite powerful, I have to say, and will also be guiding us going forward.
What frustrates you the most about Europe? We had the Draghi report. We had the Draghi report last year. Was it too ambitious? There's a number of things. And it was interesting to hear Mr. Kravis say, we can't give up on Europe. What would you do differently, actually, to accelerate? Is it regulation?
Well, I can be... having been a Eurocrat, as you know very well, having been a minister and now leading an institution, I am fortunate that at the European Investment Bank we can really move fast, you know, so we can really step up our finance, redirect resources in a quite agile manner. At least that's what I've been doing since January 2024, really putting us in this rhythm that is necessary. I would say rhythm. The orientation is right, but of course bringing 27 member states together, that is the most challenging. So I am confident that today's meeting of the European leaders is going to come up with some clear, concrete progress in a number of areas so that we can move from talking about things to actually doing. So I tell my colleagues, and many are here, they know that less action plans, more action.
You mentioned something that I have asked and talked about a lot, and that is capital markets. Because the European capital markets are too small, much too small. You compare take all of Europe, and you don't have a European capital market for the Union. Each of countries has it. Why not have a central Union capital market? It's talked about, it's been talked about, it's been talked about in the Draghi report. It was a key focus of that. I think that will make a bigger difference than almost any other thing if you had that capital market, because you need capital. So you need the private-public sector. I agree with partnerships 100%. We have a lot of them, and I think it's really important that we respect partners and respect partnerships. But I think it's really important that just think about this. The US alone in the last 12 months has spent roughly $400 billion on AI. What do you think Europe is? 40 billion. And Europe can't just sit there and say, oh, we're going to go after the superscalers, et cetera. We're going to bring them all down. No. You're going at it wrong. Bring yourself up. Do what needs to be done. With capital market, you can do a lot of those things. I do a lot of personal investing in startups. I've got some startups that are in Europe are doing very well. But the problem with it is they don't want to stay in Europe. They want to move to the US. Why? It's easier, capital. It's less regulation, and it's capital, plenty of capital. Now, when I hear that, as some governments have said to me in the past, oh, we need to have a fund, a government fund for startups, I said, no, you don't. Make it easy for foreign direct investment to come into your country. I promise you, we're a perfect example of that. If there are good ideas and good companies, money will find it, without a doubt. This idea that the government's going to get involved, just set regulation such that it makes it easy for companies to want to work in Europe and to stay in Europe and to build. And if you tie that together with capital markets, depth and breadth, I think it could really have a real growth here.
I fully agree with you that actually Europe has a very vibrant ecosystem of startups. Great research centers, great universities. Absolutely. We're like the incubator of the world. Because once they need to raise 500 million euros or dollars, they have to go on the other side of the Atlantic because our capital markets don't have sufficiently large investors. It's even worse because we do have trillions of savings that are invested on the other side of the Atlantic that are then buying, maybe through you, startups that started in Europe. So I think that indeed this should be one of our top priorities, and having been a regulator, legislator or policymaker for many years and now a banker, although the European Investment Bank is much more than a bank, but I strongly believe that. But what we're doing now is bottom up, trying to see how we can help. I do see a role for the public sector in that what we see is that actually we are activating also the ecosystem of investment funds in Europe, and sometimes we can de-risk investments, we can catalyze, let's say, investments, not the large players, you don't need it, but generating this ecosystem of European-based venture capital funds is something that we can help build, and we're doing it, and we are, I think, quite successful in it. We need to now ramp it up and scale it up.
your thoughts. So we only have like a minute left. So your thoughts on actually what we should be optimistic about for the future. I don't know if it's AI, but what are you most optimistic about for the world and Europe?
I got a question yesterday, and let me, of course, quote. I got this question just yesterday, last night, so I have it fresh. And I was thinking about this quote by Jacques Delors. I'm not optimistic. I'm just determined. So I am absolutely determined to seize the opportunities and to strengthen the role of Europe in shaping this brave new world, not just because of today, but most importantly for future generations.
Look, I'm optimistic about a lot of things. Don't get down on Europe. You know, Europe, yes, is it going to grow like the US? No. Is it going to grow like Asia? No. But you've got real capability to grow very well, and I think the continent will grow. Draghi came out with a perfect roadmap. The problem is, with 400 ideas, I've gathered it's about 40 or 45 of them have been even sort of looked at. That's a good roadmap. There's just a lot to do. So what am I optimistic about? I see opportunity everywhere. And I will finish by saying, and I say to our young people, unless you are curious, and curious about a lot of things, you can't be a great investor. So if I take any of our young people, my office is on the 77th floor at Hudson Centers, Hudson Yards in New York, and I take them to the window and I say, what do you see out there? And they're going to say, oh, that's a trick question. I see the tugboat in the Hudson River. I said, you failed. I want you to look out there and see nothing but opportunity.
And determination. Henry Kravis, Nadia, Calviño, thank you so much.
Thank you.
So I think you now have a very short break, and we'll see you back here at 1:30. Enjoy. That was very good.
That was a good way to close.